Hey guys, how are you? Andy Suka, founder and CEO of Y2K Credit Solutions. So today's topic is actually about a post that we did, I believe 4 or 5 days ago, last Thursday. We did a post on different version of credit scores. And, we get asked this question a lot, especially if a client used our service and they just finished the debt settlement program. We rebuilt their credit. They have their first prime credit card, whether it be Discover, Barclays, Chase, whatever it may be, and they're monitoring their credit, whether they use Identity IQ or they use Experian to monitor their credit. They use Credit Sesame, Chase Credit Journey, and there's a lot of companies, especially credit card companies, that provide the scores to you if you have a credit card with them, right? Almost every credit card company provides your FICO score if you have a credit card with them. So we get asked this question a lot, and it's more specifically towards my Experian score shows a 750, but then I go apply for a mortgage to get pre-approved by a mortgage broker, and my score is 710. Why is that? Very valid question, very good question actually. So I'm going to answer that question for you. But I did write that post when we did the post last week. It was very detailed, and I try to write it in a sense of where it's not a lot to wrap around your head, but you can understand the concept. But basically, it all comes down to the version of the scoring model these companies are using. For example, your credit monitoring companies like Identity IQ, Credit Sesame, MyFICO, for the most part, even the ones on your credit card companies, for the most part, they're using FICO 8. Some are using FICO 9 version of the scoring model to create your credit score. Now, when you apply for a mortgage and you go to a mortgage broker, let's say you go to Planet Home Lending, Homebridge, SBS Mortgage, Midland Mortgage, you go to one of these companies and you work with a loan officer and they pull your credit. They're pulling a tri-merge report, but they're pulling an older version of your credit score, whether it be version 2, 3, 4, or 5. So the older the version is, it's not designed to capture all of the data on your credit report to produce a score, opposed to what the newest version is designed to capture. And that's really all it is. It's just a different version of the credit scores that company is using to provide the score to you, to pull your credit to provide the score to you. Now, keep in mind, your score don't stay the same way every single day. It changes. If you have a good score today, doesn't mean you have a good score tomorrow. If you have a bad score today, you could have a good score tomorrow, right? It changes. It's not a score that's going to set in stone every single day. It changes. Now, when your credit is pulled at that time, whether it'll be by the credit card company, it'll be by your mortgage lender, that is the date and the time that score is actually calculated. Now, if you go pull it tomorrow, it's going to recalculate. The score is going to be different, right? And for example, you're going to have a new inquiry on your credit report. You may open an account. You may have new credit card on your credit report. You may have a new auto loan. So the score is all depending on the version of the score model the company is using to pull your credit. Now, if you're going to go to Chase and Citibank to get a mortgage, you want to make sure, or even to a mortgage lender, knowing that if you're using MyFICO or Experian to monitor your credit, you want to know that score that they're showing is going to be 40 points less when your mortgage broker pulls your credit, or Citibank pulls your credit, or Chase pulls your credit. It's always going to be 40 to 45 points less. That's a guarantee. So the fact that I'm telling you that now, if you're in the process of applying for a mortgage and you see your score as a 740 on MyFICO or Experian or Identity IQ, if you see your score is there as at a 740, you need to get your score to 780 So when it's pulled by the mortgage broker, you're actually at a 740 real time. Hope that makes sense to you. I'll say it again. If the score is at a 740 on your credit monitoring app, Identity IQ, MyFICO, Experian app, if it's at 740, know that when you pull it for a mortgage, it's actually at a 700. But you need to be at a 740 to get that good rate, because the score drives the interest rate. So now you need to know that your score needs to be at a 780. So when they actually do pull that credit for your pre-approval, your score is at a 740. So you lock in that low rate right off the bat. Now that's something we can help you with in my office. So if you have a question with that, or you're applying for a mortgage, or you want a second opinion, feel free to give us a call and schedule a consultation. And when you get a chance, read the post. It's very detailed, but it breaks down the whole process for you guys. If you have any questions about this video, comment, please drop it below, and I'll get back to you. Talk to you soon.